Yo, everybody, back at it once again. Favorite entrepreneur, your boy, official Tyree Samuels. And today we're actually going to be going over we're going to go over a trading opportunity that, as usual, you have the ability to take advantage of, assuming that you are in the free signals chat. If you don't have access and you have no idea what I'm talking about, stay tuned for the next clip. You're going to get access. You're also going to see what you missed out on. I'll see you guys soon. Peace. Yo, everybody, back at it once again. Favorite entrepreneur, your boy, official Tyree Samuels. Now, before we go any further, you guys know the routine, you know the motto. Go ahead and hit that subscribe button, man. Stop playing. You want to be the first one to get the update, or you want to have your homeboy tell you that a new video dropped. I don't know if you want to be that person, okay? But right underneath the subscribe button, you're going to see a like. You're going to see the ability to give a thumbs up. You're also going to see the ability to drop a comment. So go ahead and take advantage of all those resources so that YouTube knows that you appreciate your boy, because I know that you know that you do. Now, with that being said, you guys already saw the thumbnail. So today we're going to be talking about a successful trade idea that you had the ability to take advantage of. Whether or not you took advantage of it, that is neither here nor there, but I'm going to make sure that you don't miss out on any more trade ideas moving forward. So first and foremost, where did you have access to be able to take this trade idea? Okay, I'm so glad that you asked. And I'm also so sorry that I did not already have Telegram already pulled up. So as we're waiting for Telegram to load up, because I do not have the fastest computer, okay? But that's neither here nor there. We're going to go ahead and start diving into the setup. So what are we going to be talking about today? We're going to be talking about the opportunity that I took on Euro USD for a buying opportunity that went for about 85 pips, okay? Now, needless to say, an 85 pip move on Euro USD is nothing to play with, okay? So what I'm actually going to do is I'm going to go ahead and pull over here my Telegram, and I'm going to show you guys exactly where that trade I did was. I think it was sent on excuse me. I think it was sent on December 30th. So give me a second to actually be able to go find that. Scroll. You already know. Yeah. I got the flow. Okay, cool. So Euro USD was actually sent out, as you guys can see, December 30th. So as you guys see, I'm always going to let you know if it's a buy limit, sell limit, market execution. You're going to get entry. You're going to get stop loss. You're also going to know how many pips you're risking and how many pips you're going for, on top of the possible percentage gain. What more do you want? And then on top of that, you're going to get the beautiful, seamlessly crafted picture, right? So let's go ahead and dive into it. Okay. So at the time I sent out the trade, these were the parameters. And as you guys can see, you know what I'm saying? We hit some private, 24 pips, break even, right? And then, 43 pips, 70 pips, 80 plus pips. Have a happy new year. If you guys do not know, this was the official last trade sent out of 2021, right? Y'all probably didn't know I knew sign language, but it's a lot of things you don't know about me, okay? So with that being said, let's go ahead and dive in. Keep in mind, I don't know how to swim, but that's neither here nor there, okay? So the first thing I like to be able to do is I want to be able to take my replay tool and go ahead and backtrack this to basically where the setup was at the time that I called it out, at the time that I marked it up, at the time that I developed an interest for it, okay? So first things first, what I want to actually be able to show you guys is, if you look in the top right corner and you don't know how to utilize the replay tool efficiently, don't worry, I'm actually going to link a YouTube video showing you guys how to use the replay tool. Now, with that being said, for anybody that's, been on my live trading calls, which I do, a few days out of each week, I drop the Telegram link for the Zoom call in my chat. I personally prefer using a 1 hour time frame. So the 1 hour time frame is personally going to be my favorite time frame. And that's where I can, initially find a lot of my setup. So we're currently on the 4 hour. We're going to start off on the 1 hour. Okay. Now keep in mind, I'm a little different than other traders. I don't need to look at the daily. I don't need to look at all these higher time frames. I can do that, but I'm going to initially figure out if I'm even interested to do that by looking at the 1 hour. So if we notice, this market has been in a very aggressive downtrend. So we see this peak, right? So as far as the 1 hour, whoa, that looks ugly. So as far as the 1 hour is concerned, this is the peak high, right? This structure level was broken. Okay. The market continues trending. We had what is called a liquidity sweep, right? If you don't know what a liquidity sweep is basically, if I go ahead and scroll in, it is going to be, one of the best ways to know where the market is actually playing at. So normally, whenever you see 3 rejections, 1, 2, 3, right? A lot of people, for the most part, are going to assume, okay, this is a good area to sell from, which technically speaking, if you look at the past 3 examples, that's true. Okay. Especially this last example to where it kind of gave you a pretty aggressive drop. But as the market keeps returning to an area, in some people's head, it is a stronger area. In my head, it is becoming more weak. The more times the market touches the same area, it's basically getting weaker with each additional touch. So 3 touches, you might want to stay away from it. But for all the people that thought, oh my God, this is a strong resistance zone, guess what? Their stop loss got hit right here. Okay. So whenever their stop loss got hit, a way that you can know a valid liquidity sweep, which literally just means the market is targeting areas to where stop losses are being built up, either at resistance or support areas. So the way that you can validate that this is a valid liquidity sweep and this is not a break of structure for the market to continue going higher is if the market immediately reverses aggressively in the opposite direction right after it breaks above that previous high or below that previous low. So you probably have some people that have some buy stops here, right? You probably have some people that were waiting for a break of structure, a possible retracement to be able to continue higher. All of those people were wrong, okay? So this in the grand scheme of things is showing that not only did the market break this structure level, it is continuing to go down, okay? So where do we have additional breaks of structure? Because all we're doing at this point is we're building the confidence to be able to see, okay, are we going to trade with the trend? Are we going to trade against the trend? Just because I'm identifying this as a downtrend doesn't necessarily mean I'm going to take a sell. It might sound crazy, but this is just the way that I look at the market. I still want to know the overall trend though, okay? So the market technically broke structure once again here, and then it also broke structure once again here, okay? And then once again, it broke structure again here. So literally all you're seeing is the market continuing to obliterate previous lows, which is what indicating the market is in a very, very, very aggressive downtrend, okay? So now that I've actually been able to identify that, you might be like, okay, Tyree, you're telling us all this stuff about the market being in a downtrend, but you actually took a buy. Like, what's up with that? That's perfectly fine, because even if I'm taking a counter trend trade, the reason why I want to know what the overall trend is so I know, okay, is this going to be a swing trade? Is this going to be an intraday trade? Where should I be looking to take profit? Because ultimately I know this is a downtrend. So I might just be looking for a short-term buy in the overall sell model, which is exactly what ended up happening. So I'm gonna break a couple things down to you guys, okay? So one thing I initially noticed is the market ended up creating a floor here. What do I mean by that, right? The market created a low. It then gave an impulsive move to the upside, which then did what? It gave us a new break of structure. Okay, so if I remove this line, it'll be a little easier for you guys to see. So notice how the market gave us a break of structure, right? Now, this is once again a what? Liquidity sweep. Why do I say that? Look at how the market barely peaked above this high to immediately reverse in the complete opposite direction very aggressively, okay? So this market is still showing momentum to the downside, but this is one of our first valid, you know what I'm saying, break of structures, considering the market never came back to break this low to continue the downtrend. So once I noticed that this break of structure happened to the upside and the market created this floor, at this point, I could be possibly looking for a potential trend reversal and a bias change, okay? So when I initially came to the market, as I said, this is what it looked like, okay? All of this had already happened, and this is where the current area was at the time that I was looking for the setup. But before I even get over there, let's go ahead and pull out my handy dandy indicator. So I like to be able to utilize the RSI to be able to teach, because it's a lot easier than this indicator I have down here, which is called the TDI, which we're not going to get into because it is neither here nor is it there. Okay. So one of the things I like to be able to utilize is the TDI so I can see, you know, when the market is weakening. So one thing I started noticing is look at how many times the market was weakening, basically hitting the extremes. So what I mean by that, so whenever you see the white line come outside of the purple box, that basically indicates in that direction the market is getting weaker. It doesn't mean the market is just about to start going up, or in this instance, just start going down. But it means that you can start looking for possible opportunities to possibly take that reversal or that counter trend trade, right? So notice in each of these areas, if I were to put a vertical line, right, like so, you can see that the market temporarily went back up whenever it hit these areas, but the market is still dropping very aggressively. So look at all these areas to where the market is dipping below the purple box, showing that the downtrend is getting weaker, but the market is still going down. So you might be like, what the hell? The market is still dropping, even though I feel as though it should start going up. It is okay. You just have to remain patient, young grasshopper, because the market is giving you hints, right? Nudge, nudge, that, hey, if you remain patient, we might eventually give you that opportunity to start going up. So I'm noticing all this data that I'm soaking in, but I also see the market is still dropping. So at the time that I got this break of structure, that is kind of like a valid area to where it's like, okay, maybe now the market might be getting ready to show me a willingness to start moving higher. Okay. So along with that, I don't have any divergence. So that's what I was thinking about. One of the things I also like to look for is divergence. I don't actually have that on this play, so we're not going to speak on that. And it's okay. I'm not going to always have divergence. It's just that when I do, it's on and popping like Pikachu. That didn't make any sense, but I tried. So anyways, though, one of the main things I like to be able to focus on is, noticing whenever the market is showing me that it has some sort of impulsive move. So I don't know why I put that back up. So whenever I'm referencing an impulsive move, right? A lot of times to be able to continue going in a given direction, it has to initially give you some sort of impulsive move in that direction, give some sort of retracement and or pullback to then continue. So if you're looking at what the market is currently showing you, the market is trending higher. Okay. So if we just look from this area, right? Notice how the market is creating, I literally always get higher lows and lower highs confused. This is creating higher lows. Okay. So we have this low, then we have this low, which is higher than this low. Then we have this low, which is higher than these two previous lows. Okay. So this is in a sense like the market kind of walking its way up the staircase in a sense. Okay. That's kind of how I look at it. Right. Now I'm going to go ahead and erase those to get all that off the chart. So now we're starting to say, okay, the market is technically showing us it's moving higher. What else is happening? Okay. We're once again getting breaks of structure. So notice this area right here that had built up. And what did the market do? It broke above that area. On top of that, it also broke above this previous high as well. So the market is giving us continual breaks of structure. It is also showing us higher lows. So at this point, whenever I saw this impulsive move, which is about, let's see how much this was, about a 93 pip move. Okay. I was like, okay, this might possibly be the area to where the market gets ready to go up, because let me show you the last impulsive move, right? Look at this last impulsive move, which was about 75 pips, right? What did the market do? It gave a retracement back into this zone to do what? Continue going higher. So ultimately what I'm looking for is something similar from what I just saw happen to the left. So what do I want to see? I want to see some sort of retracement to then get a continuation. Now, obviously, I have to dive a little bit deeper because I didn't just randomly come up with this entry. I didn't just randomly come up. I actually need to put this back because we had what, a 30 pip stop loss. All right, cool. So let's continue, right? So from this impulsive move, I'm basically done, because everything I broke down is to be able to get me interested to see if this is a trade I want to take, to see what direction I'm going to take the trade, to see if it's going to be intraday or swing. Once I've defined all that, the only thing I need to do now is look for my entry. Okay. Obviously, look for take profits and all that other kind of stuff, but primarily look for an entry. So where I'm going to be looking for my entry is going to be based like this. I'm usually only going to be taking advantage of the 1 hour through the daily time frame to find an entry candle. I know it's a lot of people you look at, 15-minute, 30-minute, they look for lower time frames, and that works for them. What works for me is higher time frame bias. The higher time frame bias is going to be between 1 hour and daily from what I discovered. Now notice I have 1, 2, 3, 4, 5. These are what I use to be able to find my entry. That's why you didn't see me utilize any of these other time frames until right now. So what I'm about to do right now is I'm about to look for what's called an institutional candle and or engulfing candle, okay? Which is going to be personally my favorite kind of candle to be able to look for. Which, by the way, if you have no idea what an engulfing candle is, look up to the right. I'm actually going to drop a link for an engulfing candle so you guys actually know how to be able to take advantage of it moving forward in the future. So I literally just start working my way up through these different time frames until I find the biggest engulfing candle on the highest time frame. What do I mean by that? So let's start looking. So if we go from the 1 hour to the 2 hour, we can already see that there's an engulfing candle. Where is it? I'm identified. It is going to be right here. So this 2 hour candle right here is an engulfing candle. But we're not done yet because I want to find the biggest candle on the highest time frame. If I can go all the way up to the daily, it's no reason to just simply stop at the 2 hour. So I click on the 3 hour, nothing there. I ended up getting to the 4 hour. Now there's no reason for me to go past the 4 hour because obviously the 4 hours is where I ended up taking the trade off of, okay? So this 4 hour engulfing or institutional candle, however you define it, is where I'm going to initially start looking for an entry. Now keep in mind, all that analysis stuff that I just did earlier, if I don't find the engulfing candle, I can't find an entry and I would just have to wait or just pass up the setup altogether. Keep that in mind. So now that I find my engulfing candle, what is the next thing that I'm going to do? I'm usually pretty straightforward with it. So the first thing I'm going to do is I'm initially going to look for the 50% of the candle. So as you guys see, this little purple tool that I have, purple and white, this is going to be a customized Fibonacci, okay? So within this customized Fibonacci, the most sensitive area is going to be the 50%, which is right here, okay? So ultimately what I could look for is, some sort of retracement to this 50%. Now where the issue comes is the 50% is not guaranteed to be hit. It is the best area to enter off of an engulfing candle, but it doesn't mean it's always going to get hit. So what does that mean? If you just generically go for the 50%, you might miss out on a lot of trading opportunities, which is what I used to do whenever I was trading just based off the 50%. Like I would literally just go straight for the 50%, but it doesn't always work that simple, okay? So from that point, the next thing I want to be able to look at is I want to be able to focus on not only the 50%, right? I also want to focus on the opening of the candle, right? So of an engulfing candle, the opening is always going to be the top. So for a bullish candle, the opening is the top of the smaller candle to the left. For a bearish candle, like this would be an example of a bearish candle, the opening will be the bottom of the smaller candle to the left, okay? So from the opening to the 50%, what I like to do is I like to be able to take the rectangle tool and I want to be able to draw a box. This box is going to represent your buying zone. What does that mean? For people that don't like setting pending orders and you like to be able to wait for rejection, wait for other confirmations, you can utilize what I'm teaching you to be able to mark up a zone. And then assuming the market gives you a retracement back to the zone, you can wait for a rejection, wait for your, doji candle, whatever you look for, and then execute the trade. I like to be able to have a precise and a very exact entry because I'm lazy. I want to fall asleep and wake up and know that my trade has been activated. I don't want to have to sit here, wait for a rejection, wait for the candle to close, all this other stuff. That's just me though. So within this entry zone, the way that I find my exact entry is next, what I'm going to do is I'm going to utilize the regular Fibonacci tool. So as you guys see, okay, from the low to the high within this entry zone, I have the 71% and I also have the 78% fib. The way that I like to trade, I want to take whatever fib level is the closest to the opening of the candle. Why do I say that? Because the deeper the retracement, the less likely it is for you to be able to get into the trade. And look at how close the 78.6 is to the 50%. So once again, like I said, it is going to be examples to where it hits the 50%. And instead of being in drawdown, you could have had no drawdown. But it's also going to be a lot of examples to where the 50% never quite activates. So if I actually press play, I want to show you guys how this trade ended up panning out. So think about that, right? Now that we've seen the trade play out, think about everything I just explained, okay? Think about how the entry that I took based off the fib that's closer to the opening would have activated. If you would have taken the lower entry or just went straight 50%, you would have missed out on the entire move, okay? So in the grand scheme of things, Euro USD ultimately went for about 85 pips. Overall risk to reward would have been about a little over a 2.5 to 1, close to a 3 to 1. So if you're risking $10, you would have made more than double. Same concept with anything else that you would have been leveraging. So with that being said, ladies and gentlemen, that's going to be the conclusion of this trade setup. I hope you guys learn from it. I hope you guys are able to apply the knowledge moving forward. And most importantly, I hope you are able to take the trade. Now, keep in mind, if you learned anything from this video, go ahead and hit that subscribe button, bro. Do not be shy and do not be selfish. Share this information with other people. So whenever you hit the subscribe button, right underneath that, go ahead and hit the thumbs up. Go ahead and hit the like. Go ahead and drop a comment. And as usual, I'm going to see you guys at the top, not from the top, because the bottom is way too crowded. See you on Wanna Be Ya. Peace.